So I'm the co-founder and CEO of True Beacon. We're based in Bangalore, and we manufacture our own alternative investment funds for onshore investors. We also have our own PMS, which is a Nifty 200 product as well. And we also have a presence in Gift City for international investors from around the world, including investors from here in Dubai who want to invest into the equity capital markets. And we operate hybrid long-only, long-short funds as well. And last but not least, we also do wealth management for ultra high net worth and high net worth clients as well.
Right. And can you take you through the strategies that you have?
Yeah, so our flagship fund was launched in September of 2019. It takes exposure to Nifty 50 companies, and then we overlay that with our own futures and options and derivatives positions to make the portfolio about half as volatile, but still outperform the market over a multi-year time horizon. So that's been very popular to investors who are currently in India. For overseas investors, we have a very similar strategy running out of Gift City. We also have another onshore fund that is a mix of Nifty 200 and debt as well. And that again is an agile fund that aims to outperform that weighted index if you were doing that passively. And then last but not least, our PMS was launched in August of last year. Again, focused on Nifty 200 companies, uses a huge amount of back-tested data to identify the behavior of those stocks when certain factors are under play. So we call that the equity factor quant PMS, and that is not going to reduce the volatility necessarily of the underlying portfolio and held in the traditional DMAT way, but actually is an alpha play. So it's all about alpha over and above the return of the Nifty 200.
Right. So you talked about the stocks, that 250 stocks. In your universe, if we say realistically 300 companies, even though 6,000 or so are listed, and these 300 has been the focus of mutual funds and then the PMS. So how do you, what do you do to create alpha compared to, let's say, mutual funds?
Yeah. Well, it's all around, we have two lots of long only. As I said, our alternative investment funds are chiefly focused on Nifty 50, so an even smaller universe there. But we have a small but very highly focused team based in Bangalore. Obviously, have got vast experience in this, so we're trying to generate some alpha there. But going specifically to the PMS, that's an exciting product for many of our clients because it is using, as I say, all of these data points and the behaviors of these stocks under perhaps around 120 factors that may be at play at any one single time, so that we know when to enter and to exit. A slightly higher churn because it's a very active, obviously, set of strategies that are running on that. But it is, this isn't about stock pickers in isolation sitting there. Obviously, the fundamentals are fed into, our own proprietary algos for producing the model portfolio. But it's around the analysis of this vast amounts of data for each of these companies going back 10 years.
Right. Let's talk about inflation. I mean, it was till a few months back, it was a very big concern globally. Then it came down a bit. But recent data points are like suggesting it might be sticky. It's not going down. So how big that worry is, that inflation part?
Globally, I think it's a huge worry. I think that inflation, again, we in True Beacon have been talking and highlighting the dangers of inflation for the last 18 months or so before it has become this sort of mainstream conversation in financial markets. We've seen central banks around the world that have come too late to the party, too little too late. And I think actually in comparison, India has done very, very well at managing inflation, has been very cautious and so on. But if we look at other economies, we still have double-digit inflation. The normal inflation up in pre-pandemic was clearly in the sort of 2-3% zone. There are some signs that the inflation is certainly not rising, but it's not falling as quickly as possible. And this has been the story for when major economies, perhaps in the early 1980s and so on, it takes a number of years to get inflation under control. I think most worryingly, perhaps in some other economies around the world, is wage pull inflation. And that makes this even more sticky because once you start inducing that into the economy, it's not just about dampening down consumption, it's also about what you do for companies' salary bills going forward as well. So that baking that in makes it even more dangerous. So it remains a big concern for us when we look at other markets. India less so, because it has dealt with inflation for a moderate level of inflation for quite a few decades. It seems quite well placed to navigate that. And also, as I say, I think the government in India has taken a relatively conservative approach on making sure that it's kept under control, but that doesn't plunge the economy into a very difficult couple of years.
So last year we saw India relatively outperforming and global markets highly underperforming. Now the things sort of reversed in the first few weeks of this year.
Yes.
Do you think with the inflation worries coming back, that outperformance of India is going to get stronger going ahead?
Yeah, I do. I think, as I mentioned in one of the panels earlier on, I was in the US a couple of months ago, and I was talking about how our fund in Gift City, if we look at, we launched in May of 2021, and we looked up until the end of last year, and you rank and stack all of the global indices, whether they be in the US, the UK, France, Germany, Singapore, Hong Kong, Shanghai. India, in dollar terms, even with the rupee depreciation, was the only one in positive territory, and it was outperforming all the other global indices by between 10 and 45%. Things have changed, and that's not necessarily what has happened to the Indian markets in isolation. It's what's happened to the other global markets. My own personal view is that there has been perhaps a little bit of over enthusiasm, particularly in the US markets, even back home for me in the UK over the last couple of months. And so I wouldn't be too concerned about it. And I would also point to the very strong dollar. Of course, the dollar is at historic highs over the last couple of decades. And that's not helping when we look at dollarized returns, of course. But that, again, I think will be a rather transient phase as the world gets back to normal in H2 of this calendar year.
Right. So what would be the next big triggers for the market? The markets have become like quite a little bit boring in the recent past. What would be the next big trigger that would take it forward? Negative side, positive side?
I'm not an investment professional myself. We have obviously my co-founder Nikhil Kamath, who's got huge experience here. We have our own CIO who manage all of that. What I'd say, markets are never boring, by the way. They're always exciting, minute by minute. But I think that what we're looking, the strategies that we run are not necessarily fixated on exactly timing issues in terms of how the markets will behave. Either our hedged alternative investment funds are trying to reduce that volatility. So it's a more of an all-weather approach, so that we are continually that weighted benchmark of asset allocation between fixed income and the equity markets we're trying to outperform. Or indeed, whether markets go down by 5%, up by 10%, we're trying to score positive alpha. So for us, we're looking at that. I think for the rest of this year, I think we're all waiting for global markets to get into equilibrium in terms of what is real consumption, not consumption that is post-pandemic. India obviously has got quite a compelling, although less optimistic than we had all thought in terms of GDP growth, but you rank and stack that across the world. That continues to be a great story. And we're continually also looking at our international investors and what products they want as well. So we started in Gift City. We're talking to institutions and so on about what foreigners want in terms of equity exposure in India, but also what we can do for our high net worth and ultra high net worth clients from India outside as well, possibly under LRS.
Right. You're talking about the Gift City before the interview. Recently, the TDS part got increased on LRS investment.
Yes.
How big is that impact is?
It's obviously it's certainly not going to help with LRS. I mean, I think that for us, we're exploring how we can build portfolios for our clients who are onshore in India, not just in the country, but overseas as well. And that's part of, most individuals, wherever they are in the world, they have global exposure, they have India exposure or home country exposure and so on. I think for us, what we hope at some stage to be able to do, instead of LRS flowing out to places like Dubai or to Singapore or to London to the US, is that actually India is able to set up a hub in Gift City to allow Indian nationals to participate in global markets that are on the Gift City exchanges, so that they can diversify their portfolios. And actually, so that India isn't losing that business to places like the UAE.
Right, got it. One question on the PMS industry in India, Indian PMS, alternative investment industry. It has been pitched a place where there's like different style of investing, concentrating bets. They can cater to individual needs, the risk profile and everything, and it can generate alpha. But if we look at short-term period, 3-4 years, and in the 5-7 years period, there has been underperformance overall in terms. I'm not talking about specific PMS industry. How would you address that, and how long an investor should wait in this alternative segment to get that outperformance?
Yeah, well, this isn't an India issue; it's a global issue since investing started. And so we're all in a game of obviously either trying to outperform a passive strategy that an investor might take, or indeed to score alpha. I mean, those are the two options. I mean, it's a very hard thing to do. If it was easy, everyone would be doing it. I'm delighted, from our point of view, our AIFs, if you look at that weighted benchmark, we've actually doubled the weighted benchmark if you look at our 3.5-year track record, and that's done through the analysis of where the market is going, and within that running very effective strategies and sub-strategies within our fund that will contribute to the overall P&L. For our PMS, again, very early days, but we already have 3-4% alpha over a 6-month time period, and that will go up and down. But I think that for an investor, it doesn't matter where you're investing, you have to take an approach where we really need to look at 2, 3, 4 years to see whether that player is capable not just of scoring alpha or outperforming the weighted benchmark, but actually to do that consistently. So I think that's what our investors look to.
Right. Now talking about the global investors who want to invest in India, like we're in Dubai, we are pitching alternatives to global investors and then NRIs. And then recently reports came like Hindenburg and George Soros comments coming up. Does it impact India's appeal in any way?
I think the news stories like these going around the world are never going to be helpful to India or any other country. I mean, this is not an issue that's particular. I mean, we have to remember where the report came from and their vested interest in making sure that the company under scrutiny, the stock price and the metrics do fall, of course. But I think that anything that either implies a lack of governance at country or regulator level is not helpful. However, whether it's this particular group under scrutiny, other global groups under scrutiny, I think you have to be patient to find out which of these allegations have any substance, if any, and to allow the regulator in whichever country to do their business as well to investigate them fully. So obviously, anything that's a negative story for any corporate anywhere in the world is not going to have a very positive light in the country that it operates in. But this is not an issue particular to India. It's happened all over the world, and it will continue to happen as well.
Right. Thanks, Richard.
Thanks so much.